This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
All right, well, welcome to the podcast. Tim, looking forward to today's episode.
Yeah, it's good to be back. This will be a fun topic to get into. Landmines versus gold mines when it comes to buying sites and looking at land.
Yeah, that's right. I think everyone, when they think about land from an investment standpoint, understands that they can have a lot of value. And so we thought that was a good topic to hit today. It's just, when is land a good investment, and when can land actually be a really bad investment? And so there's a lot of different ways we could approach this. I know not long ago we did one on more developer-owned land and a lot of the land sites that we're seeing in our markets that developers are still holding on to just with the correction in the market. And so today will probably be a little bit different angle. We're going to look more at investor land and more from the eyes of the investor and just the person that is maybe considering investing in land or is a land investor, and just best practices, things to watch out for. And if you really do follow the principles of land investing, it really truly can be a gold mine.
I think that's right. I think land investing, maybe land development, and then there's times where developers who are buying land without being ready to start construction right away can accidentally become land investors or land developers if they end up holding a site, through a cycle or two. So we've seen this a lot in our career on all different kinds of sites. And we were talking before we started about, these big, large acreage path of growth sites that have in some cases been amazing investments, and in some cases they've been very poor investments. And then also just some of these very well located infill sites, that are at times can be at the right point in the market where they're very successful, and at times can miss the market or that submarket deteriorates over time. So there's a lot of examples as we kind of look back over the years.
Yeah, and it's hard because not everything is going to be within the control of the investor. So there's market corrections you have to think about. There's even just changes in the business, like new product types, new use types that develop over time that can, a lot of times they can add a lot of additional value if you just happen to have a tract of land that maybe works for a user, works for, like these days it would be working for maybe a data center. Where the land value can just be exponential. But hindsight's always 20/20, and that's normally the easiest way to think about, was that a good investment or not? And so trying to look ahead, especially from a land investment standpoint, where you can know that you're in the path of growth and it's a good investment, or you expect it to be a good investment, but it could be not a 2, 3, 4, 5-year hold. It could be a 15-year hold before it actually happens. And so that a lot of times can just be outside your control.
Yeah, one thing we talked about is that land is risky, and that land is not always a good investment just because it's land. And there's a misconception about that. I think that, just in general, the land is a great thing to put money in. Land really has value because of the use you can put on the land. And the use determines how much value that land has. And so, like in the infill market, if you can put a high rise on a site, there's a lot of value for that land. If you can no longer do that, all you can do is a wrap deal. It's still valuable, but it's maybe worth half as much as it was as a high-rise site. And the same thing in the suburbs. If you're talking about, single family versus multifamily, or maybe industrial versus retail, these different uses have a huge impact on the ultimate value. And there's different factors that can affect, can you build that use on the property? So there's, we'll talk about, there's zoning issues, there's utility issues or capacity issues for utilities, there's floodplain issues, environmental, and then there's just market, ebbs and flows where the market changes and a certain use type is no longer viable, or maybe there's competition across the street, so you have to switch gears. So I think that's just a good thing to kind of set up the conversation of just, the use is so critical. And if you're thinking about, I want to invest in land, I don't want to, have a landmine that's going to blow up on me and be a huge problem. I want it to be a gold mine. Really approaching it from a use standpoint, which is that when we buy land, we're always thinking that way. What can we use this for? If that doesn't work, what else can we use it for? What are all the reasons why our assumptions are maybe could be incorrect, and challenging those assumptions going into it?
Let's start with really maybe what would be considered just kind of the the really obvious landmines. And so it's more related to the site itself. Things that if you do proper due diligence, if you have a good civil engineer, that you can really cover your basis on the front end. These are things that should be more within your control when you're looking at land investing. And so it's really gonna be more on the site due diligence side. You just mentioned a couple of them, Tim, but maybe we take them a little bit more one at a time. The first one maybe just being utilities, because utilities are so important to future use. And so you need to kind of back up and just recognize, are you looking at a property that's gonna be, low density single family, which is maybe, acre lots on septic or even larger than acre lots on septic. And so your sewer needs are low and, you have more minimal water needs as well. Or are we talking, like you said, about a very dense mixed use project that's going to require significant sewer, significant water? And then there's a lot of just, downstream effects of that. Is there truly capacity? Is there additional cost? Is it even reasonable to assume that you can get that type of capacity at the site? And maybe there's even a significant time component to that.
Yeah, or a significant investment. There may be no option to increase capacity. And so we're talking about, the number of connections that you would need to supply appropriate utilities for development. So if you're talking about single family for sale product, it's a lower, level of utilities that you need. If it's a multifamily, a higher density use with a lot of units, that's going to be a really big pull on the utility capacity. And so we've seen sites in the past where it's a really great site. It's a good submarket. There's great visibility from the road. It's a major street, but there's a problem with utilities. And this happens all the time. I mean, especially in Houston, the suburbs, there are utilities, but there's limited capacity, or that you can't get into an adjacent mud, which is how we get a lot of our utilities in the Houston suburbs. And it has a huge impact on value and on what you can actually build on the site because of that. So I think you're right. I mean, utilities are one of the first things that we look for. And it's pretty hard to assess the value when that's uncertain. Because a lot of times, and this is speaking really from a Houston perspective, I think Dallas is quite a bit different. But for us, a lot of times you might be able to get utilities, you may not be able to get utilities. You might be able to get capacity, you may not be able to, and it's not very clear. And like you said, getting a good civil engineer, working through the MUD process, and there's a lot of politics with that. There's a lot that has to be done to get to that point.
Yeah, well, we're definitely seeing it, I think, all across the state. So we invest across the state. We own properties in all the Texas major markets. And every major market, there are municipalities within those markets that are tapped out of water, in some cases tapped out of sewer. I mean, there's areas up here in North Texas where there's development moratoriums. There's not going to be water for maybe the next 3-4 years. And it's all a function of there's been so much growth, which is a great thing. But if you're a land investor and you're just looking at all the growth and all the rooftops and all the homes, and then you find a tract of land, and maybe it's even a tract of land that's surrounded by development. So your mind may not go to, well, there's not utilities there. You might think, well, there's utilities all around it. And I remember seeing this a lot when I was in Houston as well, like you said, where maybe it's an older mud and they just don't have capacity. And so maybe the ability to annex into that mud is kind of past because the former landowner, they didn't annex when they could or should have. And so now it's going to be really difficult to get utilities, and you may even have to get really creative and try to do private utilities, which depending on what area of the state you're in, you may or may not be able to do from a legislative standpoint. Yeah, but I think utilities probably have one of the biggest impacts on just the true investment return and the highest and best use. Normally, there's always something you can still do, but if you're going from, let's just pick a 20-acre site in the suburbs, if you're going from an industrial development or a multifamily development back down to a on-septic development, you're talking about a significant hit in your value, and there's a good chance you're probably not making money at the price that you bought that property at. So that the utilities and understanding that, and like we said, having a good civil engineer is really important as a first step in analyzing any property for development.
Yeah, I think one caveat to that is we're actually seeing in Houston institutional industrial deals get done without utilities, get done well and septic, or get done with maybe a well and like a sewer connection or something like that. So that is a little bit of a difference that we haven't seen in the past. I don't know how widespread that's going to be, but we're starting to see that.
Yeah, we're not seeing that very much up here. I know of there is a deal that we were talking to a developer about in the Central Texas market where they started on septic and then they're going to actually transition to city utilities. So they were able to get their partner on board, but it was predicated on the fact that there would be city utilities in the future. So that's definitely interesting, and that's probably a unique situation that you wouldn't want to count on as an investor.
That's a great point.
That working out. But the second one's probably environmental. That can really catch you as a landmine, because we both worked on some really complicated land sites that had significant issues with, previous uses, a lot of dumping that had been done on the site, methane plumes, like years of cleanup with the TCEQ, very costly, very timely, and then a lot of times restrictive of what you can really ever build on that property. You may never be able to build a residential use, may force you to more of a commercial use. And so that I think can be an area where you could really get into trouble.
I think that's right. And I think we see that a lot in the infill market, so when you have these areas where there's been a lot of industrial uses for maybe in some cases for 50 years, or we've had issues where they go 100 years back where there's been a long-term industrial use or multiple uses on the site. And there was a time when people would just go dump chemicals in the ground, and they weren't concerned about that. So almost every infill site that we see, there's some sort of environmental. And I think you could also say, Tom, that because we're talking a lot about landmines and what to watch out for, there's also the gold mine side of things too, that there's some sites where there's just, incredible opportunity. And one of the areas where I think that you can see that is if there is an environmental issue that's a limited issue in scope that you can understand, a lot of those issues can be fixed. And it takes some money. It takes really good, people to work with that are specialize in cleaning up those issues. And then it takes time. A lot of times it may take 18 months or it might take even a couple of years. But if the property is valued correctly, that could actually be an opportunity to go unlock a site that maybe has been kind of off market and not viable and make it viable. And we've seen some incredible sites and deals we've worked on that are main locations that people will be shocked that there was ever an issue there. And there was an issue that got cleaned up and the site sold for a ton of money. And so I think that's something to think about as well.
Yeah, I think it all starts, to your point, Tim, I think in all of these landmines that we're talking about, utilities or environmental, it doesn't mean that it's a problem necessarily if there's environmental or utility issue, if you knew that going in and if your investment assumptions accounted for that. And so I think a lot of this is just we'll talk about your business plan as an investor here in a minute, because those are, that also can be faulty and that can be a landmine in and of itself. But when you're talking about site due diligence, I think we're trying to think about the investor that sees a lot of growth and they see a tract of land and they look around and they say, wow, this looks like a great buy, or it's in a great area. It's cheaper than I thought it would be. And they don't really do their homework and they just go buy it. And I think you're right. That's very different from the opportunity of saying, this is a hairy, complicated site. A lot of people haven't tackled it. I'm going to go get either time, or like we've had cases up here where we represented a buyer on a really complicated environmental site and they closed very quickly at a significant discount. So they took a lot of that risk, but they quantified the risk on the front end, which is very different than, paying a market price and closing on the property and then finding out after the fact that you have a significant environmental risk. Yeah,
if you didn't do the proper due diligence, and it can be very challenging because there's times you could have a clean phase one, but maybe you shouldn't have a clean phase one because there's some historical issues. Like we had a client one time that had a clean phase one, but decided they would go start drilling holes in the site and basically doing a phase two just to make doubly sure. And they were getting all these clean samples until they literally went through a railway car that had been buried with toxic chemicals in it on the site. And back 40 years ago, someone had buried multiple railway cars full of chemicals on the site, and you had to hit the right area of the site to actually drill into those things, and it was just solid toxic chemicals. So, there's crazy situations like that you can run into in certain parts of town. So understand the history of the area and what was there before and what likely could be there, is important.
Yeah, that's probably about the best definition of a landmine, that you drill the hole and we're surprised. I think with what we're talking about, you just don't want to be surprised. You're trying not to be surprised with what you found. And Yeah, we've had some interesting ones. Yeah, a church buried underground because just from a couple hundred years ago that was discovered after development started. We had another one where there was actually it was an ancient Indian burial ground.
Yeah.
That they discovered after the fact. Because some of those things how would you know that, right? Unless it's documented somewhere, or you do all, sometimes you can't test enough. And so there's there's landmines that are going to be difficult to avoid. But I think the big kind of overarching concept that you already said is land can be a great investment. It also can be a very, very bad and risky investment. And so making sure that you're really thinking through a lot of the potential hurdles to overcome, and just getting good advice. I mean, we help landowners and clients all the time, just giving them advice, working through these type of conversations, getting good consultants. We know really good environmental consultants, good civil engineering consultants that can help, work through a number of these issues. And another one would be zoning. And so, there's really good, zoning consultants as well that we have a lot of respect for, that we like to refer business to. But on the zoning side, I think that probably where that can be the biggest landmine is just assuming that it can get handled after closing, and basing your investment off of, the assumption that maybe it's zoned agriculture or it's zoned commercial, and you're trying to rezone it to industrial or multifamily or some other mixed use, and just assuming that I think I can get that through. I'll buy it at a, kind of a market price or close to market price. That really doesn't work with the current zoning. So I think understanding that you could get stuck from a zoning standpoint, that can be a very political process that it's out of your control. I think zoning can be a very significant risk, especially in the markets in Texas that have zoning. Obviously in Houston, there's not in most of the Houston market, but in the markets that have zoning, that can be a big landmine.
Yeah, you guys see that every day in Dallas, and fortunately in Houston, we don't have as much zoning, which maybe some people appreciate what it can do to make the city prettier, but from a land broker perspective, we kind of like the lack of zoning here. But we do have zoning in some of the suburban municipalities, and I think to your point, a big problem for a land investor or landowner is not understanding what the end use, what they really need to get a deal done. So whatever these municipalities want is normally not market. So when they approve multifamily, they may want to do structured parking in an area that's a surface park area, or they may want to do ground floor retail in apartments, which no one wants to do, even in the best, inner loop kind of infill type of markets. And so like there's an example of a site, I just talked to an owner this week who has a real challenging situation where they're in a PUD, they got zoning, but it doesn't fit the market. And it's actually a good site in a good market. So you think this is going to be a great deal, but it's a definition of a landmine. He's been trying to sell for 10 years. He can't sell it. Just the whole way it was approached, it was approved by the city, and it's not something that anyone wants to touch, and no one wants to touch it for 10 years. And so I think understanding, even if the city has approved it, with the actual end uses, see that as a viable, market option. And then sometimes we've had situations where at one time there was a viable need for maybe office or some of these uses that are really difficult right now. And so you go and get zoning, and maybe there's some retail and some multifamily and some office, and you're able to sell off the retail multifamily, and you're stuck with the office use. And no one wants to do office in that market, especially now since COVID. It's been a really hard office market. And the city's like, we don't want to rezone it. We want to keep it as an office deal. That was kind of our deal up front. So again, you probably see that a lot more in Dallas, Tom. I know you guys have had some great sites you've looked at that are office sites where the city just doesn't want to change that use type.
Yeah, I mean, there's a specific example I'm thinking of that we worked on pretty recently. It was really unfortunate because it was a church that bought a property, then they decided they weren't going to expand, and so they put it on the market to sell. We brought them a buyer, went under contract, and the city at first was really open to working on this use, and we had city council support, but then the city started having a lot of turnover of their staff and just the planning department. And anyways, fast forward, now that site has fallen out of contract because the city still doesn't really know what they want to put there. It's kind of analysis paralysis. They're not really in a hurry to make a decision. They're trying to now tie it together to some other surrounding properties and kind of a bigger vision for a lot of the acreage in that area. And so meanwhile, the church is just kind of left in limbo on this property that they own that they really can't sell because the city doesn't really know what they want that property to be. And all at the same time, they had a developer that was a really high quality developer that was willing to work with the city and try to figure out, a unique product there, mixed use, a good project. And it's the third developer that's tried to work something out on that property. And so you can get in these situations with these cities where, for them, they're just looking at it very, very differently a lot of times. They're thinking about what's the city going to look like in 20 to 30 years. They're not really in a rush to maybe approve a zoning. And so like you said, they can require a lot of these additional, things like ground floor retail or, higher end office finish out for industrial or, whatever it is, something that may just be outside market. And there's definitely plenty of times where cities do zone properties, but it's a significant risk to just assume that you're going to be able to get zoning through, because a lot of times it's the neighbors surrounding the property. I had one recently where the neighbors basically came out, and this guy had owned the property for his family for probably 50 plus years. And the neighbors said, I think one neighbor came and said he should be able to sell his property and make money and it get developed into single family. But most of the others neighbors came out and said, I don't have anything against him personally, but I would prefer that property stays undeveloped. I think it's really pretty for the city that we have a 50-acre homestead. And it's just not, it's not fair to the landowner. And so fortunately that one got approved. The city actually, it was incredible because the city councilman really stood up and just said, this isn't right. This developer did everything we asked them to do. They have a really good plan. It's single family, for crying out loud. So it's, these are going to be nice homes. They have pocket parks and trails, and everything the developer did was really well thought out. And fortunately, the city councilman just said, he's like, if we don't approve this, when this is really, it's in the best interest of the city as a whole. They've worked with the city. He's like, eventually the state of Texas is just going to take this away from us, and we're not going to be able to almost just like, keep landowners from being able to do anything with their properties. But we see some pretty crazy things on this side.
Well, that's such a great example of what we talked about with land values and the risk with land, and how, if it's going to be a homestead, you're talking about a tenth of the value, or maybe even, less than that, of what it could be if it's developed to its highest and best use. And so that's a really important thing with zoning, to understand that it could be a great property that has a lot of things going for it, but if the city goes against you, and sometimes, like you said, it's very political. I mean, we've had even in Houston, some of these smaller, kind of outlying municipalities have zoning, and we'll hear, they're very pro-development. They're approving a lot of things, and there's like a wave where they do approve a lot of things, and then things switch over with the city, and then the next round of developers that come through the city is brutal. They won't approve anything. They're super difficult. There's always these cities will look at some really cool kind of suburban type infill. So up in Dallas it might be like a Plano or a Frisco. In Houston, be Sugar Land would be a good example, or somewhere in Katy where you have really high density infill kind of construction. So maybe you have structured parking, multifamily. Like in Sugar Land, there's actually a condo deal that was done a long time ago that did really well. There's ground floor retail. So every little municipality is like, we want to be like that. Like, that's what we want here. And you're like, you have to have incredible rents to support that, incredible demographics, a lot of population density. Like, that may never happen. Or if it does, it could be 50 years from now. And so I think that's a huge issue that I would be worried about as a whether you're a land investor or land developer, is understanding the zoning and getting clear on that going in.
And so transitioning from zoning, and we'll blitz through these a little bit because we could spend a lot of time just on the land due diligence, but I want to get to the more of like the investment plan assumption side. But if you're in Central Texas, you might be dealing more with more topography, more soil, like rock conditions that can, a lot of times they can make a land parcel look like a really good investment, but what's under the ground, just from a development standpoint and the cost to develop, you have to go and you have to blow up all that rock. I mean, that can be really expensive. We've heard some incredible quotes from clients and what they've had to pay to go like work on those type of sites. And so you can get caught there for sure. That's why you'll drive around areas of like North San Antonio or Austin where there's really pretty properties, but they're just so expensive to develop. And that's why they haven't been developed. But in Houston, so maybe we focus there since that's the market you're in. I would say in Houston, it's all about drainage, and it's
Yeah.
all about where are you going to detain. And that, especially with just a lot of the laws that have been passed recently in the last 5-10 years since Hurricane Harvey, that's been really significant there on the value side.
I mean, that and floodplain, which goes along with drainage. But yeah, there's sites where sometimes the floodplain will change. And so, maybe it was on 15% of your site. Now it's on 30% of your site, which is a really big deal. We've seen just a difference over the years in what developers are willing to work on. So it used to be that if a site was in that 100-year floodplain or 500-year floodplain, they would still build on it. And now, even though you can engineer around those things and technically you can build on those sites, for the most part, especially the institutional developers will not touch a site with floodplain. And so I think that's a huge issue in Houston that we look for with sites is there floodplain? Like you said, if there's no floodplain, there could still be a drainage issue, which is significant in Houston. And has that been addressed? And there's a lot of very technical. We're out looking at a site right now where there's some technical issues with that affect the amount of detention on the site. That literally it could be a third of the site or it could be 15% of the site, and that's just a huge difference in value. If you can't use 15% of your site you thought you could use, I mean that's going to affect how much money you could make on that site, even if you could have some really good uses and good development on that site. So I'd say it's one of the biggest things that we struggle with here in Houston and have to deal with.
Yeah, that property you're talking about, we were talking about that the other day. That property that with the detention requirements doesn't have floodplain, does it?
There's a little bit of floodplain on it, but that's not really the issue. The issue is the depth of the outfall on the site. So it's like a 2 to 3 foot outfall on the site. And so you could have like a 15-foot outfall, meaning you could dig like a really deep detention pond, which would take a lot smaller, part of the site to get that detention volume. But if you can only go 2 feet deep, you can imagine, I mean, this is like a little pool that you're going to have to, or not a little pool, a big pool that's going to be really shallow. You're going to have to dig. They could take a big part of the site. So, I mean, those are the kind of things I don't really think people think about unless you're an engineer. And especially like you're saying, I mean, you look at the site, it's just a big field. It doesn't look like there's any floodplain. It looks like there's no issues. But there are some development issues that you want to understand. And there's creative ways around those things. In that specific situation, we have a really good engineer that's helping us think through some ways to be a little bit creative on it to work it out. But that can have sometimes there's not solutions. And if that's the case, that can really hurt you.
Yeah, well, if you think about that, you have 60 acres, 20 of those acres could be just going to a detention pond.
Yeah.
Which is so significant. And even if it's 10 of those acres, that's still a lot of the land. And so making sure if you're looking to invest in property, and again, if you're anywhere in the Houston area, drainage is so key. And I don't know if the law is still the same, but I remember after Hurricane Harvey, if you were in the 100-year floodplain, I think you had to bring the whole site 2 feet above the 100-year floodplain, and I don't know if that's still the case.
It's that way with 500-year too. Yeah, I mean, it's very restrictive, and that's why there's also, and I don't want to get too technical because I'm not an engineer, but there's also, like in Houston, you can't impede the flow of water across the site, and so that's an issue as well. You think about a lot of these sites where if you're in the infill market, a lot of times the whole site is going to be covered, with buildings, or with a garage or something like that, and so that's going to be a significant issue with some of these restrictions. But yeah, our detention requirements tend to change, impervious cover changes. So being up on, where things currently are and then where they could be going, and then maybe having a contingency plan that if the current reality or my assumptions change, am I still okay? Or are we threading the needle with this where if anything changes at all, I could be in a very difficult, situation that could affect the value of this property.
And this is kind of related to, or could be related to drainage, would just be offsite easements that would be needed for development, which again, something maybe outside your control, because you're having to get a neighboring landowner to be willing to let you drain across their property, or it could be access across their property. I know you were saying that's impacted some deals you guys are working on recently where even big developers are deep into contracts and are now realizing that they hadn't realized they needed an easement, an offsite easement.
Yeah, and you have to go get the easement, which means you have to go talk to an adjacent landowner, and they can just say no. Or they can say, yeah, I'll give you the easement, but it's going to cost you, $1 million or $2 million, and that may or may not make sense. Fortunately, if you haven't bought the site, there's the option of dropping it and losing some pursuit dollars, or maybe there's some workarounds. But once you own it, you could be a little bit trapped. And I think a similar situation we've seen is when you buy a site and you need to be able to work with your neighbors. So maybe there's a need for an assemblage, or there's a property next door that's an eyesore, and you make the assumption, well, they're going to work with this and we'll be able to work something out because everybody's reasonable. I met with a group, some good friends of mine that own a good site in Houston a couple of days ago, and they have a great site, and there's this terrible gas station that's kind of on a portion of the site that's an adjacent use that you would just think there's no way that this guy wouldn't work with this and at least, maybe put some money in the gas station, reskin it, or maybe sell, and the guy just does not want to work with anybody. He doesn't care about what it looks like. The city's finding him because he looks so bad. And, they want to go sell this and they can't really sell it for it. It's hurting their exit on the property because of their neighbor. And so I think we've seen that many times where sometimes neighbors can be very difficult. And you would think that if you could present them something where they can make money and sell with you, or they could even maybe give them money to improve their property, sometimes they're not willing to do that.
Yeah, I mean, I think you wish everybody was logical, not just reasonable, but logical and kind of pragmatic, and realize that, hey, if we're willing to pay you for this and this is good for you. But I think we've been surprised over the years just how many times that has not been the case. And I think we've referenced it on another episode. Just you're making me think of holdouts, just people that weren't willing to sell to be a part of a development, and how many developments you can go see across the state where there's some random property that just got built around. And there's a lot of times where they'll quote unquote be reasonable. It's just too late, and they left a lot on the table by just almost over negotiating.
Yeah.
And I almost think sometimes that's what they're doing. They're thinking, maybe this guy's thinking, I'll have this attitude, and eventually the developer you're talking about is going to pay me so much money. But the reality is, for them, it's got to be a business decision. If there's a way to work around him long term, they'll just work around him long term. That's
what they'll do. And I think you're right. It's an unsophisticated way of negotiating, where someone thinks, if I just keep saying no and if I'm really difficult, then people are just going to overpay. And there's a saying in our business that's so true of pigs get fat and hogs get slaughtered. And sometimes being a little bit greedy and pushing a little bit is smart, and it can work. But when it's completely unreasonable, and when you just do that forever, at some point you get left behind. And I think that's important when you own a site and you have a neighbor like that, trying to understand where they are, because there might be a sense of, I'm not going to wait around forever for this next door neighbor to get on board with me and do what makes sense. And maybe I need to figure out how to exit without that owner and just go sell my property. And that might hurt the value, but that might be smarter than waiting 10 years and then doing the same thing. But that's a significant issue, I think, that could create a site, make it become a landmine. That I think you could make a mistake there, not think that that's the case, because you can present that person with a really good offer.
So beyond just the actual land itself and some of the due diligence that can be done, a lot of it we just talked about, let's back up and talk about when you're first even just finding this tract of land, or you're coming up with your investment thesis on why this tract of land, why this area, and some of the sometimes very faulty assumptions that we see investors make, where they're expecting there to just be continued growth. And maybe, like for example, in DFW, north of town is historically where growth just it's going at such a fast pace, versus south of town. When things slow down, south of town slows way down. North of town is always going to be more active. Houston is probably more north and west that you're seeing the same type of activity.
Yeah, I think there's this belief that these submarkets, or that land in general, just is always increasing in value. And so we'll talk to sellers a lot, and they'll be like, well, my property was worth $10 a foot 5 years ago, so it must be worth $15 a foot today. And they almost think there's just kind of this consistent, 10% increase in value a year or something like that happens. And that's not the case at all. The submarket in the overall area has a huge impact, and these major MSAs in Texas that are seeing so much growth, we believe we'll see massive growth in decades in the future. They're not going to grow every direction consistently. They're going to grow certain directions very quickly, and they may take up 10 miles of growth in a certain direction over a 10-year period or even a 5-year period. There's other areas where they're really not going to grow in certain directions. They'll be very, very slow and very limited at how fast they grow in that way, and even the kind of pricing that you can get in those directions. So a good example is this is going back like 20 years, had a very well-capitalized investor come into Houston, buy probably 20,000 acres in sites across maybe 7 different sites. And their strategy was, let's go by path of growth and let's get ahead of where the development's going to be. They bought a very frothy time in the market. And so that's another thing to think about is timing is so critical. The area you're buying in, the timing. When you're buying when things are very frothy and then you expect things to continue that way to be able to exit in 3 to 5 years, that's pretty dangerous when you're on the fringes or maybe you're beyond the fringes. And so unfortunately for them, they bought in some of these parts of town where they were hoping growth would get there, but the city wasn't really growing that way that quickly. And then we had the Great Recession happen. And so then it was several years after that we helped them exit all those properties. And I think they got their money back, but they held the properties for like 10 years. And they just had a really hard time getting out of them, especially what they were hoping that they would get for the properties because of the way they made the buys.
Yeah, that's really interesting because I know the investor you're talking about and some of the areas they bought in. I remember buying in the wrong school district, for example. Yeah. Buying in just if where Houston's historically growing, like buying in the exact opposite side of town. Yeah. Just thinking, well, it's going to grow in that opposite direction. And it was, I don't know why this is the case, but it was making me think as you were talking about a lot of these cities that like in DFW, the little municipalities that are maybe south, east, in these areas, they've never really grown at the same pace. They don't have the same demographics. They don't really just have the same momentum behind them, but they'll look at like a Plano or a Frisco, and then they'll have expectations for like what gets built in their city, like a Plano or a Frisco, and it's just not going to happen. Like those cities are so unique. I think that's a lot of times what people forget. And you have developments like Sugar Land Town Center, like Legacy West and Plano that are so unique. But if I had just a dime for every city that said they want Legacy West or think they have a site in their city that could be Legacy West, which is just an incredible development. It's got to be one of the top mixed-use developments in the country and just how successful it's been. So, I think that from an investor standpoint, you can fall into that same trap. Well, we're seeing a lot of growth up north. I'm looking at the map of Dallas and south. It's not that far. People have gone so far north. But what's happened in Dallas is all the income, all the jobs, all the schools, everything's gone north. And so, yeah, you might be an hour north of town, but you're not an hour north of where you're working. It's more about where's the employment, where do people want to live? And they tend to want to live in these areas that have grown really fast. And so that can be really a dangerous way to invest. And on the flip side, there's a group that has also invested kind of across Texas, done a lot in Dallas, similar to the investor you're talking about, but where they made their buys, it was at very strategic kind of freeway locations, intersections, like off the tollway, off 380, in these really incredible locations. They bought them ahead of time. They bought it when there wasn't a lot of development around it, but they bought kind of in the bullseye of where Dallas has been growing for the last 50 years. Yeah. And then they bought, major intersections that now have just turned out to be incredible properties. And so I think it's really important to look at historical trends, not base everything off of historical trends, but we know enough about the cities that we work in to know just the area of town you're making your investment in. That can have a lot to do with the risk of the investment.
Yeah, and I think that and this might sound like a little bit contradictory to what I'm about to say, but there's a sense of where you have to be really careful with land being super long-term in some of these submarkets, especially in Houston. Dallas might be a little bit different, but Houston, good submarkets can tend to change over time. So we have examples, especially in our infill market, of what was a really good submarket that has been like in a 10-year decline or a 20-year decline. And I don't know that they're going to come back. And so values just kind of flatline there. They don't really go down or up. And we have a lot of that. And I think in the same in the suburbs, there are certain areas that were really hot at one time, and now they've kind of cooled off, and the demographics have kind of dipped, and they're just not as good anymore. So I think, being smart about how long you're holding and when you exit is really key. So not holding too long. And then kind of the opposite of that is having the ability to be patient and having the ability to wait. And sometimes you don't want to wait super long because you don't want to wait 15 years. And I can understand that. But you also don't want to have, high carry costs or, have debt or expensive money where you're having to sell quickly And we've seen, so many times where someone could have just held another year, or another 18 months. There was a lot of value that they could have achieved on the site. But, maybe there was some bank debt that, they couldn't get renewed, that they had to, get the site sold and pay the bank debt off, or maybe their investors are like, you just got to sell this. We don't care if it's worth 30% more in a year. You got to sell it now. And so I think having the ability to be patient, but then also being smart and not being too patient. And if you're in a hot market, both the submarket's hot, and then the timing and the overall kind of macro market, there's capital for deals are happening. You don't just sit on that and think, well, it'll be worth 15% more in 2 years. I think that's very dangerous. I'd say sell now, go do something else. Don't wait and just hope it's going to be better in the future.
Well, and that makes me think of another assumption that I think a lot of investors will make and that we've seen is when there's a big announcement, there's maybe a major corporation that's going to move, kind of like when Exxon moved to the North Houston area. Or it's funny, we had Universal Studios announce in Frisco a couple years ago, and later that week we were talking to different landowners, like land investors in that area, and one of them was like, my price just went up 17% because of Universal Studios announcing, and his property wasn't even like adjacent, or even, it wasn't even in Frisco actually, which is pretty funny. It was just in the northern suburbs. The same guy still owns the site, and he's not able to sell it for any more. He actually hasn't been able to sell it 3 years later. So and it's interesting how I think we've said this a lot. The announcement is almost better than the reality. A lot of times there's so much just momentum that will follow those announcements. But the reality is, you take a Exxon or Universal Studios, it takes years for the construction to even happen, for people to move. Obviously, Exxon was like thousands of jobs, which I could see that having much more of an impact than just like a 100-acre theme park. I'm not sure how that's going to have significant impact for an entire region, the way that Exxon bringing 12,000 employees was really projected to have. But obviously, in the case of Exxon, we talked about it a couple episodes ago. There were people that went and made bets, and now 10, 15 years later, I guess 10 years later, they're selling those properties that they never developed, and they're selling them for significantly less than what they paid because it just got so hot at the time. And I think at the time I'm still probably getting a pretty good deal. I'm paying $25, $30 a foot. People will be building high rises here in the next 5 to 10 years. Like all of 45 will be high rises because that's what Southwestern Energy was doing, and that's what Exxon was doing. And so that's, as you know, that's not what happened.
Well, what was, a big reason for that is all those, 12,000 jobs, or I forget what the number was. There's a lot of people that were going to be at that headquarters. A lot of them decided, you know what, we're willing to go commute. We'll live in the Heights, in infill Houston, or we'll live in some of these adjacent markets. And because the Grand Parkway came in at the same time, we can easily get to the Exxon campus. We're not going to live within a couple miles of the campus. And so that's a great point. It's still a good market today. It's not like the market's bad, but they're literally 10 years later, we're seeing similar land prices, if not lower land prices, to what we saw in the lead up to Exxon, building their campus there and the Grand Parkway opening up, which is kind of crazy because you think 10 years, shouldn't the land prices be doubled, because of that in that time? And they really haven't. And so I think you're right. A lot of times the optimism and kind of the excitement about these announcements is really where the opportunity is. And then they don't always pay off after that.
Well, and I think another one would be just when you're looking at an investment, your expectations that you have for whatever it is. And I remember there was a developer, I can't remember who, but told me years ago, you do all this modeling and underwriting on these properties, and there's like so many things that have to go right for that to actually work. And they're like, if you can't do it on the back of a napkin, just really high level, and it makes sense. Like if you really have to go in there, like a lot of our developer clients are constantly telling us, we're in there tweaking something over here, bumping this over here. Like if you're an investor and you're having to go and have like an underwriting model for your land investment, that's a pretty dangerous place to be because it means it's probably going to be difficult to be patient. Things are really going to have to work out. And if multiple things have to work out and you don't have a plan B or a plan C where it still works out for you at the end of the day, I think that can really be a landmine.
Yeah, one thing that I don't know if we've really talked about yet, but looking at a site, if my plan doesn't work or if it didn't work, what would be my backup plan? So I think that's an important point because it's good to have like a plan A. Like this use works on the site. It's a multifamily site. We can sell for this. We can get a return. What happens if for some reason you can't do that? Whether it's the capital markets or there's too much competition in the submarket, rents have come down, occupancies are down, whatever that might be. Maybe it's a retail site and all the retail users you thought would go on your site go across the street. What's your plan B? What other use works on the site? And some of the great sites we've seen where people still make money years later when they're, plan A and sometimes plan B doesn't work is there's a lot of other uses they could transition to. So there's a single family use, now it's a BTR deal, or now it's a multifamily deal, or it was a retail deal, now it's an industrial deal. So when you look at a site, what are multiple uses that could work? And I understand like in Dallas it's different than Houston. Houston's great because, maybe it's an office site that now you can do a hotel on, so you're fine, or you could do multifamily on. I guess in Dallas you have some limitations there, but even within the current zoning, are there ways to get other uses in there if kind of your plan doesn't work? That's pretty critical.
Yeah, I agree. And I think that even with zoning, there should always be the ability to have other options, or you want to put yourself in a position as an investor where there's other options. And a lot of times, some of these zonings, if you're in a PD, they can be pretty flexible on putting different uses on the same properties. And then sometimes, another category with this is there's just things that are outside your control, but they can potentially be landmines. And specifically, they can be landmines related to land and land investment. And that's like if there's market corrections.
Yeah.
So, land can be trending in a certain direction. And then there's a significant market correction. So, it could be a COVID, could be like a Hurricane Harvey in Houston, could be a recession, dip in oil prices, could be some, global conflict, going on. But all of those, they can have a significant impact on land because land is not cash flowing. And so at the end of the day, when things start to slow down, things start to shut off, growth is really what drives the value of land. It's turning it into something, it's creating something. And so it will take a back seat and it'll be secondary to everything that's already existing when there's one of these market corrections. And so that can also just make it a lot more painful to sit through any type of market correction on land because you're just resetting. And you could be resetting for easily 3 to 5 years, depending on what the correction is.
Yeah, and that goes back to our point. If you go through all these steps we've talked about, the property diligence, the right expectations, making the right assumptions about the site and the submarket, just assume that you're going to be wrong on some of those things because there's no way to be 100% right. So if you're off, by a big percentage, maybe it's 20%, 30%, if things change, are you still going to be in a place where you can execute and there's value? Or are you not? And I think when we look at sites, we really struggle through some of those questions of, we feel pretty good about all these things lining up and playing out, but what if they don't? Then what happens? And that always happens. I mean, it's crazy just thinking about through the last couple of decades of being in this business, how there are so many crazy things that have happened on these different deals over the years, whether it's really good things that happen, big announcements that happen, or just these crazy market corrections or floods in Houston or oil price wars. I mean, all these different things that you would never expect that happen. And then you got to pivot and figure out, what do I do now? So.
Yeah, that's a good point. Well, and as we're talking, I'm thinking, gosh, especially if you're listening, it's a lot of almost like be afraid to ever make an investment. And I think we've talked ourselves over the years out of a lot of different investments because at some level, there's things that you can control and there's things you can't control. Yeah. And obviously, you try to dial in as many of what you can control, you dial in, and then the ones that you can't, none of us can really see the future. We have guesses of what we think will happen. We see trends. We're obviously as close as anybody is to what developers are doing, where activity is, and all of that. But at the end of the day, maybe let's just walk through, because ultimately the decision is to let's move forward. Let's take risk. All investment is risk at the end of the day. So you're just managing what that risk is. So when we look at best practices, when we think of Goldmines, just setting yourself up to be in the best position to make a good land investment and it actually being a goldmine. We've kind of alluded to a lot of these, but I think there's probably 4 or 5 just best practices that would be good to just walk through.
Yeah, I mean, I think the first thing would be looking at the submarket, looking at the area, part of town that you're in and getting comfortable with that. Do I feel like this is going to be good for the next, 3 to 5 years? When we look at land, we're looking, could we immediately sell this land or maybe say in the next 12 to 18 months, sell it and get a good return on it? I think we want to be very confident that there's that kind of an exit there. We're not just hoping that in the next 5 years it's going to increase in value. And then secondly, going through all those due diligence items, so utilities, zoning, environmental, floodplain, all that kind of stuff. I need to feel really good about what's my kind of highest and best use. Can I actually build on the property? If for some reason I can't, what's the second highest and best use? How would we position this? Who's our buyer? Even if you're going to hold this for a long time, who's the buyer going to be? What kind of use is it? Sometimes it might be another investor. Maybe you're far enough out that, there's a lot of growth and we're going to hold this for 2 or 3 years. Another investor is going to buy it. We'll get our return, but they'll hold it for 5 more years. They'll sell it to developers. So there's different ways to look at that, but really being sure about that. And to your point, we're talking about how risky land is, and I talked about how land is risky and the use really gives you the value for the property. The reason that we love land as an investment, because we're big believers in investing in land, even though we're talking about the negatives here, the reason is because it's very inefficient. There's a lot, the investment sales market, if you're buying retail or apartment properties or industrial, those are very efficient markets. It's very hard to get an edge. There's lots of competition. A lot of the data and information is public. Land is pretty much the opposite. Every single site, there's a lot of nuances. There's all these factors that can affect it. Being an expert on it really gives you an edge. We kind of joke about it. There's, you can have insider trading because we hear about, this is happening over here, or that's happening, or we're involved in a deal, and so we know that's going to create value, down the street. There's all these things that are not public that we can know that can create value for us and for our investors. So I'm a huge believer in investing in land, but it's kind of proceed with caution because there's a lot of potential downsides as well.
Yeah, that's right. Well, those were a good couple examples of just kind of best practices. And we didn't talk a lot about pricing, but I would say, obviously probably one of the most important things to consider, just a huge impact to how your investment does, is what is your land basis? What is your going in basis? Because that can really protect you from a lot of the things outside your control. And obviously we have an advantage there because that's what we do. We understand pricing really well. Texas is a non-disclosure state, so it can be difficult. A lot of times you can think that you're actually going in at a good basis because you're just looking at like what's on LoopNet, what's on Crexi, what's showing up on one of these third-party services that's just saying, here's what's on the market. But a lot of times that's pretty disconnected from what is actually trading, like what the values are. Or it could even be, and this goes back to the nuances of land, it could be that you're looking at a tract of land and 500 yards away, the true value is a pretty significant discount to the tract that you're looking at, because no tract of land is really exactly the same. At the end of the day, it's more about what you can put on it, and location does matter. But knowing that you're getting a good buy on the going in is really important. And then being able to carry and be patient. So being able to carry the property if you have to, being able to be patient. The only way you can be patient, obviously depending on how you're capitalizing it, is if your investors are patient and just the cost of the capital that you're using. And every bit of capital, whether it's cash or not, has a cost to it because there's always an opportunity cost. But if you have some kind of a pref that you're paying, we've seen a lot of clients that they use their own capital to close, but then they charge like an internal pref. And what happens after a couple of years is you're just digging such a deep hole in that investment that you'll pretty much never get out of it. And at some point, you just need to take the quickest offer that gets you back to being whole again, because if you hold it an extra 5 years, there's just no way you'll dig out of the hole. But I think the carry cost, looking at things like what are the tax situation, could it be an ag exempt? If you're an investor of land, not using debt, having an ag exemption, using cash, I think all that is really critical just to the success of the investment at the end of the day.
Yeah, that's a great point. We could spend a whole podcast talking about values, because I think that it's another part of why land is so inefficient is the values can fluctuate so much just between different market cycles, but also different use types, then different issues with specific sites. I had a friend of mine who's an office broker asked me the other day about a certain part of Houston. What would office land cost in that area? And I was like, that question, you literally you could have one price you say $10 a foot for a certain kind of site in a certain part of that submarket, and it could be $30 a foot for a different size site in a different part of that submarket. Where from an office standpoint, they look at if it's Class A space, it's going to be these kind of rents, this kind of pricing. It's pretty consistent. Land is just so inconsistent when you look at across different submarkets, different use types, and then even within the same submarket and use types, all the different things that could impact that specific site. So it can be complicated.
It's a great point. Whenever I get a call from someone that says, can you help me out with it's kind of a general question like that, I always have to ask, like, can you just tell me where the property is?
Yeah.
Because I can't, it just isn't that, I mean, I can answer it really generally. Like if you said, what is land worth in the Woodlands?
Yeah.
It's such a general question. It's like that, I can give you an answer, but it's not going to be a good answer.
Yeah, even specific, if you said multifamily land in the Woodlands. I mean, it's like, are we talking about a surface park site? Is it a high density site? Is it a wrap site? I mean, there's so many questions. It could literally be a $10 site or a $100 site if it's in the Woodlands proper. So there's a lot of complexity to it, which I think there's opportunity in that. I mean, we like inefficiencies in the market because it creates opportunity if you really study it and you follow it over time and you see the trends and where it's going.
And I think this is also where we can really separate ourselves and just help a lot of landowners on the listing side. Because I'm thinking about landowners we've met with recently in parts of town where we study these things. We study utilities. We're studying zoning. We know what the city council is looking to approve. We're looking at their long-term planning. We know what use types are paying in that market, both what they've been paying from the comp side and what they're willing to pay because of offers that we're making. And so when we go sit down with a landowner, our plan can be so customized to their property. So like talking through this episode, there's so many different things we're bringing in. It just kind of sounds like, how would you ever, button all this up and just, summarize this for a property? But we really can. So we can take this knowledge and this expertise and then kind of property by property, situation by situation, we're able to look at it from all these different angles to determine what's the value, who's the buyer, what's the right way to market a property, because that's not always going to be, one size fits all either.
No, that's right. Those are all really good points. Well, it's probably good to wrap it up now. It's been about an hour, so I think it was a great conversation, and we went through a lot here. So hopefully, it's beneficial for our audience.
Yeah, thanks, Tim. This was good. So, looking forward to the next one together.
Sounds great. Thanks, Tom.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.